Investing is always a difficult story. You never know where to put your money, either in real estate and the stock exchange, while some venture capitalist is getting two-digit profits from deals that you will never have access to. But the crowd is changing something, and this is not about sharing economy, which is totally different. It's something about the crowd economy. AP has told us about the 5 pillars of the crowd economy, which is based on purpose, participation, productivity through a platform. And one of the best explosions arising from the crowd economy is crowdfunding, a really disruptive way of making investments. Well, crowdfunding was born in 2005 after the economic downturn and the explosion of social media. And it's literally exploding. In 2015, we are going above 35 million of total volume in the world. This slide is very interesting. You can see Asia, which is more or less like Europe, in 2014, but in 2013, Asia was not on this slide. The volume was substantially zero, so an enormous raise. And there are 4 different kinds of crowdfunding, as you know, and investments are lending and equity. Thank you. With lending, which is driving the market. Well, we will concentrate on equity now because notwithstanding the amazing growth that in some countries equity crowdfunding is having, there are still some problems that might be resolved in order to have an even more massive and fast growth. For instance, strategy. Many crowdfunding platforms, equity crowdfunding platforms, do not seem to have a clear strategy. They just seem following the others. And indeed, it's quite difficult to make a strategy when you don't have a clear benchmark. For us in Italy, it's quite difficult to understand what's happening in the States, because if we are not accredited investors, we cannot go on the American platform and browse them and study what is happening. And when you don't have high volumes, it's also difficult to put some budget on study and research. So we need high volumes in order to have results, in order to go forward. This is why in the United States, there is some merger acquisition starting among platforms. They want to hit at least the 100 million volume. So let's go through 7 topics that I think deserve a special attention in order to disrupt this already disrupting business. And let's start from investors. I'm from Italy. My government started with an upside-down approach. So learning from the first people who wrote about crowdfunding, they have created a legislation which is made for retail investors. But we understood that the majority of equity crowdfunders are not retail investors at all. We have an average between 7,000 and 8,000 euro investment per deal. This means that if they are not professional investors, they are at least very sophisticated investors. And this is a major problem because it's not a matter of regulation, it's also a matter of strategy. If you are wrong with the strategy, you address a wrong message to your investors as far as communication, engagement, information is concerned. So you risk to have a bad positioning of your platform. A second topic is target companies. Equity crowdfunding is usually associated with startups, startup businesses, which are very early stage, immature, still to be validated. Well, The reason is easy. The reason is that startups have a lot of tractions. So government do like startups, but investors love profits. So there is a little mismatch in these two needs. And indeed, what governments are doing is good. In the United States, for the first time in 2014, since years, the Kaufman Index started to rise again. The Kaufman Index measures the rate of new opportunities, of new entrepreneurs coming from new businesses, not fired people, just new business. People want to create new companies with concentration by areas. And the same is happening in Europe, where the volume now in 2015 is about 7 billion, with a plus 86% driven by the startups. But let's come back to our topic. Looking at some data disclosed by an American company, American equity platform, we find out that the average age of crowdfunded business is between 4 and 6 years. So they are not startups at all. They are mature business that have a certain kind of validation. And if you look at the revenue, in the average, the year in which they crowdfund, they have surpassed 400,000 euros of revenue. So they are companies which are already generating revenues. And the pre-money evaluation is usually between 5 and 6 millions, giving investors a cut of about 30%. So what does it mean? That this is not a startup opportunities. This is a great opportunity for companies that have demonstrated something, because we are speaking of investing money. Another important topic is information. In fact, several equity crowdfunding platforms give very, very poor information about the deal. As an investor, I would be interested in a lot of items, not only because I'm a lawyer myself, but when you are investing your money, you want to know exactly where you are putting it. And TV shows are just fiction. Shark Tank-like pitches do not exist in the real world. So investors want to see what is in the company. They want to go through a due diligence, look into the deals, look into the contract, look into the intellectual property. Then there is the business model. Well, caught in the startup mood and fashion, people usually think that the only way out for an investment through equity crowdfunding is an IPO or a trade sale with a multiple capital gain. And often people forget that there are also great opportunities given by companies producing very, very high dividends. For instance, in the energy sector, it's a very safe market. You get amazing returns. The returns are given by the price of energy, plus in several countries there is a public incentive. And it is the government or government-owned agency that pay the company. So it's a safe business, producing a lot of money, not exactly a startup going to an IPO. In fact, often this company have a terminal value which is 0, but meanwhile in 20 years you have made a lot of money. Or a totally new, different business model is that of project financing. There are some large infrastructures that are offered through this business model. And it's a business model which is based usually on a 60% loan from the banks. You've got a long-term exploitation agreement. You build something, for instance, an highway, and you get returns from that. Well, if you substitute the loan, the bank loan, which is very difficult to be obtained in downturn times and which is quite expensive in terms of interest, and you substitute the loan with an investment from the crowd, you not only have important savings, but you can also obtain some interesting side effects, like for instance a large involvement of local communities. This is something very interesting that we will present tomorrow in Milan, in Italy. There is a project which is named Crowdforum, which is helping the public administration to go into this kind of feature given by the crowd economy. Then let's speak of the offering length. There are some equity platforms that offer equity for months, similarly to Kickstarter or Indiegogo. But Kickstarter and Indiegogo are different models. They are very emotional, and it is normal to leave it for a long time. Instead, we have found out that in equity crowdfunding deals, investment arrive the first day or the last week of the offering, because nobody, even no professional investor, no retail investor, nobody is available to leave his money stuck on a platform for months. It has no sense. Those who invest on the first day, they are happy to invest, and they know that that deal is very, very interesting, so they do not want to lose the ticket. Otherwise, they are investing in the last week. So it has no sense to have this open window and damage the image of the company which is offering equity, and which eventually remain on the website with no investment for 1, 2, 3, 4 months. Then there is verticality. I think that's very, very important topic. There are some generalist platforms that are doing great, and there are some platforms that are going vertical on a specific market. This is important because you can develop a community of investors which are specialized and that have a safety zone in which they are happy to invest. In the United States, real estate platforms are doing great. There are also other platforms that are specialized in energy, in biotech. Well, life science is very interesting. There is a new study that has been released a few weeks ago by Biocom, which demonstrates which is the effort of life science platforms in Europe. There are about 18 of them, but only 8 between Europe and the United States are vertical and specialized in life science. If you look at this chart, it's very interesting. You find out that we have an average investment which is substantially above the average, with average deal of over 500,000 euro. And if you look into the chart, the top 10 are above 1 million. And I also have to say that this chart is led by Syndicate Room of Gonzalo de Vasconcelos over there, and we speak in a while, so congratulations, guys. Syndicate Room is a generalist platform, but it's one of the best under business model point of view. The other ones are vertical, so they specialize in life science. Last topic is Crossborder. Well, equity crowdfunding has sense because of the web, because of the scalability of the web, because you can reach a lot of people around the world with totally different experience, interest, possibility, opportunities. Unfortunately, this is frustrated by national regulation because every single country wants to regulate finance by itself. In Europe, we have the MiFID system, and equity crowdfunding is considered an exception to the MiFID system. This means that it cannot be passported as an exception, so you are bound to make crowdfunding in your own country. And the only solution is to register the platform as an investment company, because in that case, you can passport. And this is what Investor, and a Finnish platform is doing in order to enter in Europe. On the other hand, in the United States, investors from abroad are accepted only if securities are registered under Regulation S, which is a very specific regulation. So if you want investors from abroad, you have to register your security, for instance, under Regulation A+, which is the new instrument for equity crowdfunding, and also under Regulation S. And it's very expensive, so nobody does it because it has not much sense. In this case, you are not raising 100 or 200 millions. The amount are not effective under this point of view. So the problem with the United States is that they are limiting the opportunities of offering equity to US residents. And for instance, there is this case of the Eureka, where this platform, which is based in Dubai, has been fined by the SEC because it solicited investment from to people living in the United States. So until we do not resolve this issue, it will be very, very difficult to have a world equity crowdfunding market and to use the full scalability given by the web. Okay, that's it for now. We have made some polls during my speech, and we asked to the people about, for instance, what kind of company would invest in. Let's see at the results. So, as I told before, not only startups going to IPO, but people is interested also in investing to low-risk revenue-generating company with no exit purpose. Can we see the other slide from? Okay. We don't have answer for the information. Oh, okay.
There we go.
Are you satisfied with the information provided by equity crowdfunding platform? The answer is no. We cannot give information like on a donation platform or like on a reward-based platform. It has no sense. You are putting your money in there, the money for your retirement. So you have to know exactly in what you are investing. Can we see next one, please? Would you co-invest in large infrastructure project, which is project financing? So not startups again, but a project in your city to support your community. And we have a 50-50 on that. So there might be a project granting you a 4, 5, 6%. We do not have high dividends in this kind of business, but we have a certain safety which is given by the client who pays, which is usually the government. And so we have an interesting position. Oh, somebody has changed his mind. No, okay. Let's see next one. What kind of equity platform are you most likely to invest in? Here we have the generalist, real estate, we have some life science, information technology. Okay, we have generalists and life science at the moment which are leading the chart, and also somebody which is interested in information technology. So you can go ahead with this poll. We might see eventually other results later in the day. Thank you very much.